This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse, here with your co-host, Bill Hamill.
I'm somewhat more comfortable collecting real estate than I am collecting other stuff.
Okay, we're excited about today's episode. We don't have Steven this afternoon. He is away, I believe, in Puerto Rico. Not quite sure where he is at this point, but I'm in Albany, New York, and we have a special guest today. We have Ali Nichols, whose company's name is Getaway. Ali, please tell me about your real estate background and a little bit about yourself.
Yeah, thanks so much, Bill, for having me. My real estate background really starts when I would say I was a little kid. I've always been super fascinated in the space, and I have memories of every Sunday circling every open house in the neighborhood and begging my parents to take me there, and not just to like look at pretty houses, but I'd always be negotiating with them to say, if you were to trade into this one, it's a better investment. The appreciation over time is really there. And so, this fascination for the space really started at a young age, and more so on the deal. How do you optimize the deal, and figuring out where the best play is, and it's just always been fascinating. And so, I started my career in the tech industry and had an opportunity to work at some really amazing companies based out of San Francisco. And one thing I knew was I always wanted to get back closer to the real estate, but I loved this, the world of technology and the environment of going after big problems, working with incredibly smart people who are really excited about what they're doing. And so my entire career, I've been trying to kind of meld those two ideas of how can we bring technology to real estate and really accelerate the entire industry in new ideas and new ways to look at it. So before starting Getaway, I actually joined a very early stage prop tech startup called Bungalow, which at the time was really trying to revolutionize how we do co-living and property management in major metros. And at Bungalow, we really shifted that company to become a tech enabled operator for institutional capital to buy single family rentals. So really being able to source all the deals on the market, identify which ones were perfect for our business model, underwrite them, go out, transact, renovate, and then property manage, and learned a lot running that organization there. And kind of had that moment where it's like, okay, I have all the chops now. I've learned this. I know how to build the product to do it, but I personally still can't afford to get into this at scale. And so that's where this idea really started of Getaway, of how do I build a platform that enables myself and all my friends and folks in my walk of life to really be able to access real estate investing in a way that makes sense for them at lower buy-in and kind of no pressure, hands off. So we are building a real estate investing platform that enables everyone, so non-accredited and accredited investors alike, to be able to buy fractional shares in vacation rental assets and then earn cash flow and appreciation from their ownership percentage of a single asset. And then beyond just their investment, Getaway members actually get the opportunity to vacation in the entire portfolio of homes at member-only rates and discounts. So there's this added benefit that's beyond just the investment and investment in your lifestyle.
Okay, there's a lot there.
There's a lot there.
I appreciate that detailed background. That's fantastic. I love how you started off with your parents at a young age with the open houses. Did they have any real estate background, or were you walking through open houses with them at a young age, really digging in on the logistics of what you were seeing? And I don't want to say educating your parents, but I'm just picturing as you're having these discussions with them? Are they looking at you like you're just along for the ride for this open house? Where are you coming from with these questions and this vision that you had at that early age?
No, it's so funny. Neither one of them were in the real estate profession. So I don't know what drew me there, but it truly, I'd be like, the price per square foot here is such a good deal for this part of town. The schools are great. Look at the view. And it just kind of dictated my entire life from there on out. I think I've fallen in love with this kind of combination of the math and the deal, the negotiation, the psychology of humans when it comes to this asset class. That's just fascinating. So I definitely dragged them there. They were really
No,
good
that's
parents.
cool. A lot. Geez, it's at an early age, you knew what you wanted to do. Not many of us do, I don't think. At least I'll speak for myself. Until I was 21 or so is when I learned about real estate, and then I knew what I wanted to do. But as you're educating yourself in those open houses, you're already talking or thinking about the most important things. No matter what asset class you get involved in, you're looking at price per square foot, the demographics of what works for this particular property, and that's a common theme for any investment, no matter what size or asset class. And then you got into the tech industry and going to college, learning tech. Were you still super focused, knowing that you were going to take this tech education into a real estate career?
Yeah, on the side I was. So I've always been, whether I was working full time, in a tech role or not, I was always looking at opportunities on the side, and was able to do my first deal right out of school at 23 in the city of San Francisco, and made it work. Lived there for a bit, then was able to rent it out, and kind of did midterm housing there. So rented it through Airbnb, but for 3 to 4 month periods, and really optimized my rental revenue on that. So it's always been, the real estate pieces have always been there and been a part of my life, even when I was full time on other things. But now being able to bring them together as my full time job, and now dedicating all my time to this company has been pretty awesome.
Awesome. Love how that experience led you to your new company, Getaway. As you were learning with that first company out of college, did you have to have involvement in every component of that business, where you were identifying properties that they were acquiring, the operations of those rentals? Did they have you doing everything, or was there a focus on any one thing?
Yeah, so when I joined the company previous to starting Getaway, um, I was fortunate enough to be in a role that was very ops centric and ops heavy at first. So literally like on the ground managing a portfolio of properties to start, and then have really been was able to grow in um, my responsibilities and kind of ownership of what I did, kind of work my way up the chain into then the entire investment flow of our investment thesis, the geos we're going after, the types of properties, what's specifically in our buy box and works, owning all of the underwriting, renovation, scope, all the way through then to management.
Okay. So right through the beginning of that first learning curve, right through every component of managing one of these single family rentals, seeing that was a W-2, that this is where I like to get some value for the listeners, that jump, that huge jump from W-2 to doing your own thing. What was it? And people are always trying to figure, what is the right time to do that? Some
Mm.
people can wait way too long or never do it at all. And some people may jump in a little bit too early before they actually have what's necessary to run their own business. What was the time period in that W-2 and that mindset, knowing that you wanted to make that leap?
Oh, God, that's a great question. Um, I think the biggest thing for my personal growth and when I felt that we were ready to take that step was really understanding the financing aspect of the game, and being really comfortable there because just the structure of capital that you're able to put together is so it just it will make or break your deals, and especially right now as we see rising cost of capital,
Yeah.
eliminate a lot of deals on the table. So really getting more comfortable in that space and understanding to, okay, here's day one of how I can make this idea a reality, and as I scale, here are the building blocks, from a financing partner perspective that I'll need to go after to get to the next level. So really that knowledge and kind of growth in my own personal career gave me the confidence to step out on my own.
Okay. And what did that look like, stepping out on your own? I know right now you're in Miami, and
Yeah.
I think we can all agree that that's a great place to do vacation rentals. And was that where you started? Did you start on the West Coast, San Francisco, or did you start your new venture in Miami?
So we started our new venture in Miami. I'm actually currently sitting in a uh, Getaway Miami property
Right.
that we're doing a photo shoot on later today to get it live and up and running as a listing. Um, Post pandemic, I think the world became a lot more virtual and being able to be remote. And my co-founder and business partner had moved to Miami. He sold me on it. He said, "Let's start this together in person and build out a team in person here." And so here we are, giving it a shot. Plus, to your point, like I'm able to go to our property now, hopefully properties soon, in person, and the proximity is nice. But we also have property in Arizona. We are actively in contract on properties in California. So we will be national, but Florida definitely has a epicenter of a lot of short term rental activity.
Fantastic. Wow. Okay. So that was one of my questions here is if you ventured out into other locations, and you have. So being in Miami, Arizona, California, tell me about that. What type of team do you have? Sounds like you have to have an acquisition side here, looking at different areas of the country. What is your focus at this point?
Yeah, so we're very small and a nimble team right now. You're talking to the acquisitions lead
All right.
as you speak. And one thing, because we're so focused on building out this like basically investment platform for for in all consumers, we've also brought on a small engineering team to really help us build out that tech product to be able to accept investment. That's a huge, what we think it will be a huge differentiator for us over time. So it's myself, my business partner, and then two engineers. And then we have basically, an army of third party vendors and folks that we lean into all over the country, and really built out a really strong kind of trusted vendor network, until we hit scale and can hire our own full-time people.
Excellent, excellent. So let's get into that tech side. I know that that's your education background, and on short-term rentals, I'm sure you utilize that quite a bit. On the acquisition side, what are you utilizing to identify properties on that tech side to make your life seamless and to save
Yeah.
time getting those deals? And what do you use on the tech side for those vacation rentals? I hear so much not only on vacation rentals, but self-storage, being able to do a lot of the managing where you don't need anybody on site, with different tech, cameras, stuff like that. Tell us about that.
Yeah. So first on the acquisition side, we have built internal tooling that allows us to essentially scrape all of the opportunities on the MLS in different areas that we're interested in, that also fit the short-term regulation rules, because that's a big thing in this space, is like, especially like in the city of Miami, one block short-term rentals aren't allowed, one block over they are. So just being able to really geofence down into where the business model works and doesn't is huge. So automatically pulls listings available in the areas that are short-term, rental okay. And then we are able to basically automatically underwrite with some general assumptions at the market level, that stack ranks opportunities, that then I can go in and review one by one. So basically it takes out the beginning, hefty 80% of the workload, and then the human in the loop idea of, okay, let's validate what our algorithm has said is the top opportunity in that market, and make sure that the computer and the system doesn't know if that property is like right next to a railroad track, or if it backs up to the freeway, or those types of things like that. We're still very far away from a world where we can completely automate underwriting. So we think about it as like, how do we shift through the noise, get the top opportunities, and then add the human in the loop to validate. So that's how we handle the acquisition side. On the actual property management and operations, there's some like really, really fantastic softwares that have been developed out there. So we've leaned into Guesty as kind of our property management system, that enables us to have all of our listings in one place. It distributes it out to all of the listing platforms to generate leads, whether that's Airbnb, VRBO, Booking.com, etc. It goes on, the list goes on. And then we can manage basically every support ticket that comes in, manage cleaning, manage our revenue and expenses all through that platform. And then we've been able to build kind of like our branded travel site and everything on top of the back end.
Excellent. So you've got your systems all figured out. So now you can focus on scale. One thing I know, Steven, who's normally with me on these, he went to school in Tampa, and he loved it there, and had recently purchased a single family home, and he's successfully using that as a short-term rental. And I'm starting to think the same thing. I own some multifamily longer-term rentals in that same area. And I had originally was thinking, I'll grab an apartment of mine and utilize that for my, second home type thing when I'm down there vacationing or checking out the properties. Then I witnessed what he was doing, and I'm thinking the same thing. I'll just grab a single family home, follow his model. It needs, maybe a pool, some outdoor space, entertaining space, so it's inviting for someone to pay a premium for that short-term rental. So ultimately, it's thinking of taking that single family home someone used for their full-time residence, turning it into short-term rental. Of course, as you said, making sure that neighborhood allows, that type of short-term rentals. Different municipalities are starting to get a little fussy about anything less than 30 days or whatever the case may be.
Yeah.
Are you finding a lot of your acquisitions are taking people's normal homes and turning them short term, or are you getting into smaller multifamily, maybe 3, 4, 5 units that were longer term multifamily, and now you're turning them into vacation rentals?
So our strategy is really targeting markets that are primarily vacation rental markets. And so oftentimes, the properties that we're looking at were already being used as short-term rentals, or the, the municipality is very friendly to that use case because it fuels the economy in that area. And so we've seen a lot of different opportunities, whether that's buying an active like turnkey opportunity that the owners are just hoping to get into a different space or use the money for a 1031 into something else, where we're just buying a short-term rental that's already active. But there have been other opportunities where there is an ideal home that could be converted. And I think just the number one thing you have to be aware of is like, what are the rules and regulations of the municipality? Are you making sure that you're following squarely in what the community has set as their guidelines? So to answer your question, it's been kind of a mixed bag in terms of already active vacation properties versus single family rentals or homes converted.
Okay, no, great answer there. And the one uncertainty I had, this is what I always have concern when we get into, some of these deals, whether, on the Airbnb short-term rental, you're able to get into something, the neighborhood permits it now, but the concern of after that, we create our business plan for that short-term rental and then decide to change the rules on us. Have you dealt with that?
We haven't dealt with that yet. I'm sure as we scale, that's definitely could be a risk. The beauty of this particular product as well is like there is the ability to switch it to a long-term rental and still be income producing. And so there's optionality as risks come up over time to quote unquote a fallback plan.
No, and that's so important. And I have to look at that from the long-term rental stage too, as we're underwriting any deal. I will consider that we're stress testing when we're underwriting anything where we're looking at not only our pro forma, which is sometimes not necessarily best case scenario, but the most realistic projections based on our assumptions, but we also have to stress test. When I say stress test, we're looking at worst case scenarios. If they happen, what's our break even on our rental so we're able to survive? We can't just look at the rosy side of our pro forma, and then because things happen, if totally. Something happens and we haven't stress tested, I think people who do it like that may run into some serious problems, especially in the market cycle where we are now and the uncertainty staring right at us. With that thought in mind, what is your outlook on vacation rentals over the next year or two as we, I'm not sure, some people say we're in a recession, some people don't. We're certainly in an uncertain period of time.
Definitely. Yes, and no one has the crystal ball. Our take is that, in our thesis is that very upmarket rentals are going to be hit hard. So the rentals that are, multiple thousands of dollars a night, part of our strategy is really to invest in what I call quote unquote mid-market rentals, but, homes with 2 to 5 bedrooms that are kind of in a price point that's, per bedroom is much cheaper than staying at a hotel in the area, that will attract groups of friends, families, and provide a better and more affordable solution. So we think that this kind of mid-market rental will be more insulated as folks that might have been traveling abroad are now staying domestic, and folks that might have been paying for upmarket rentals can still play in this mid-market range. And then, when the economy is great, everybody's be able to stay in that range. So really our thesis is ensuring that we're not at a price point that's unobtainable for most. And it actually makes more sense to stay in one of our properties than trying to rent, 3 hotel rooms in Miami or 4 hotel rooms in Miami. It's much more economical.
Well, there you go. There's the stress test. I appreciate that explanation. You guys are looking at not only during the hot time, that massive upside that we all have, no matter what type of real estate we're doing, but yes, we have to protect ourselves, insulate ourselves, stress test in other uncertain periods of time, making sure that, you're still going to be successful moving forward. Let's get into the financing on vacation rental, something that I'm not familiar with at all. I'm very well versed at financing, small multifamily, well, even owner occupied single family homes, right up into larger multifamily complexes. What's the bank's appetite? What are some of the challenges you might deal with financing the vacation rentals?
So to date, we're currently using kind of the DSCR type of debt service to finance these properties. And so the biggest issue that we've been running into is whether or not the lender is willing to use your underwritten short-term rental rates or long-term rental rates on this type of asset. And as things have kind of gotten more uncertain in the market, folks are definitely leaning towards more this long-term rental rate as being where they're going to set their debt service coverage ratio to for the terms of the loan. So then it makes the underwriting and acquisition process on difficult mode a little bit, because you think, as I'm looking at an asset, I'm like, I know I can do more than this, or this home has a rental history from the previous owner that proves that it produces more income than the lender is willing to underwrite it to. So that's been the biggest kind of challenge to overcome right now. But everything comes back to this idea of debt service coverage ratio, and can you find deals that pencil, that makes sense, and then we're, with our business model, we're able to exceed that and not fear about not hitting that.
Surprise, surprise, there's that big similarity. No matter what asset class we're doing, banks are conservative. They want to make sure if they're lending on this property, it's going to be able to cover itself to survive on actual numbers. But also it's up to us as real estate entrepreneurs to show our business model, our pro forma, and selling this model, saying that we're going to do this and it's going to operate like this in a year or 2 or 3. So they're excited to lend to us. Tell us a little bit about that, knowing that you're taking a property, operating on the actuals, and you have your vision of the vacation rental, maximize and optimizing that income. Do you have to do renovations a lot of the times to get to that income level you're looking for?
So I would say our thesis on renovations is lightweight surfaces, resurfacing cabinets, new countertops, new appliances, things that kind of make, I call it lipstick or mascara on a home, like really make it pop in photos and make it an inviting place that folks want to come stay and come spend their vacation and, in their vacation time at. The biggest thing for us in terms of kind of like upfront CapEx is really on the furniture and decor.
Mm.
You know, the items that like really make a place warm and inviting tend to be more how you furnish it and how does the interior design look and feel to the consumer. So that's where we invest heavily in those items. And then really only in our underwriting process, like only will acquire homes that we feel that lipstick or mascara of replacing surfaces that are easy and more affordable to do so, pencil.
All right. I love that. The lipstick or mascara. We've used different terms in multifamily over the years that I won't I guess say what we're putting lipstick on some of the time.
Yeah.
I never heard the mascara part, but no, but I can vision that. And you're buying properties in great locations that people want to be and making them pretty, but also that key component about furniture, designing the house. People are going to be there just for a few days, and you want to make it competitive to the other properties in that hospitality market, so you can maximize. Getting back to, I guess, the whole picture of not only your acquisition and your financing and putting your mascara on the property and furnishing. I know that the bank normally likes to lend a certain percentage of that full acquisition and value add, as we call it. How do you finance the other part of that deal? I guess you can say if the bank is going to give you 70%, you have to fill in that 30% plus your value add and the furnishings. What's that look like?
Yeah, so we were fortunate enough to raise some upfront capital from some venture capital firms out of Silicon Valley. So we, as we think about Getaway and what we're building, it really goes back to this real estate investing platform for everyone to be able to get access into this asset class. And so, a lot of the initial investment is really meant to help us build that platform and bring demand on to Getaway and be able to do this over and over again. But to start, we've been able to use some of that funding for the equity portions and furniture and things like that.
Awesome. And we're focusing on something similar. My career, I normally did joint ventures, and that worked out really well. But it gets to a point, if you want to scale, you tend to run out of money. You like to have your nice list of resources to be able to get into any good deal that's in front of you. But when you really want to scale and to get into bigger and better properties or a lot more properties, I'm left with that syndication model as a great tool, where we're looking at other investors that may want to invest. In my model, it's been $50,000, $100,000 or more in our deals. What's your model look like?
Yeah, so investors can invest in Getaway properties starting at just $1,000 per investment or per share. And what they're investing in is really owning a percent of the economic interest in the property that they've chosen to invest in. So it's very property specific level versus a REIT or a fund model in that sense. So the consumer has more kind of agency in what they're choosing to invest in and true ownership of a single asset.
Oh, I love that. You can get in for $1,000. Boy, that's I like that model, because people who want to get into real estate, a lot of a reason that they don't is, I don't have enough money. I'm not sure how to get in. I don't have the experience. Where people can get in with $1,000, watch how that goes and learn a bit as they're moving along here, and then they can choose if they want to continue on, getting into higher investment amounts, or maybe even getting into different areas of real estate after they've experienced what you have to offer. Tell us about, knowing that you're in the short-term rentals and people can get in with little or a lot of money. What else? What other benefit do they have when they have those ownership shares of your vacation rentals?
Yeah, so beyond just the actual investment in real estate, all of our investors become Getaway members, and our members are able to stay and vacation in the entire portfolio of homes at member-only discounts and perks. So it's, we're really excited that this isn't just solely a real estate investment. It's really access to this network of amazing homes and the investment in your lifestyle.
And that's cool. I love that part of it. You're not only getting people involved on the investment side, there's also what hospitality companies readily sell. I know I got into one, is the vacation rental, where for an amount you buy in, and then you have that maintenance cost on a yearly basis, but you have this vacation rental that you're able to utilize along with those benefits. Do they have to, are they able to just book a specific block and they have a certain amount of priority, or is there any other cost that they have to look at other than their initial investment?
So when it comes to staying in the properties, members, there's tiers of membership. You can think about that kind of analogous to like an airline miles program, where the more you're invested on the platform, the higher your tier. And then, access to booking out properties is given priority based on the tiers. And then obviously members get priority over the general public. And then in terms of the cost structure, so it does, because this is an investment first, and we're very focused on our return profile for our investors, members, when they do stay, they pay a nightly rate, but it is discounted based on their membership tier. So it will always be more advantageous to stay in a Getaway property than another short-term rental in that same city or market.
Very nice. Very nice. All right. We see your entire model. I think it's fantastic. This is the Collecting Real Estate podcast. So they say you have to have 3 of something to make a collection. So we have 3 questions for you to wrap this up. Number 1, in 5 words or less, what's the most important thing you've learned since you started collecting real estate?
Conservative underwriting assumptions.
Yes, there we go. There we go. Hey, that sums it up. Just like we discussed, in hot times, it's real estate is, I don't want to say easy, but it's much easier to have lucrative investments. But when times aren't, and when there's challenging times, conservative underwriting is extremely important. Second question for you, which is non-business related. What are your 1 to 2 year personal goals? Non-business related, your personal goals.
Oh, that's such a great question.
Or are you always thinking about business?
I was going to answer with the real estate thing, but that doesn't.
That's what everybody does.
Yeah, right. So beyond, well, and I'm going to go there because it's personal and it's on my own side. So beyond the current business of Getaway, my significant other and I are working to build an additional single family rental portfolio. And our goal is to have at least 10 properties in the next 2 years.
Right.
So that's the side hustle of the main hustle.
All right. I'll let you get away with that.
Okay.
Third question: how can the listeners and I assist you, and how do we contact you?
I love it. If please check out getaway.co, so just .co, to really see investment opportunities and what we're up to in building there. And you can contact me always at ali@getaway.co, which is ali@getaway.co.
So when I'm going to Florida, if I'm not going to my market in Tampa, I do like Miami. I've been there 3 or 4 times. I haven't been there in a while, but you'll be able to book me in a fantastic getaway vacation rental down there.
Heck yes.
Awesome. All right. Well, it was fantastic having you on. I learned a lot here on vacation rentals and how you're taking it from just vacation rentals and having that vacation benefit for your investors. So once again, thanks for coming on.
Thank you so much, Bill.